Dr. Sivaraman of iknowindices.com. I'm back again to do the second part of Tracking the Forex Market Together webinar. So we'll be doing the part 2 of Tracking the Forex Market Together webinar between 13 and 13:45 GMT on 16th of September. We had the first webinar between 9 and 9:45 GMT during the European session. So we will see how exactly some of the observations we have made in the live market code page and what happened to the market subsequently during the course of this European session, and also during the gap time what they are trying to do it in order to read what could be the possible move during that of the US session. So I'll be explaining to you the market reading technique and also how we can also follow the forecast and try to fine-tune our market reading and try to decide on the trading. Even if you try to enter or exit into that of the market, we also need to know the strategies which are very important in trading. Without the trading strategy to limit the risk and maximize the profit, it is very difficult to just follow the forecast alone and earn money from that of the market. So now we are watching 13 GMT, the gap time, and between 12:30 and 12:45 we will be watching the early US session move. So they will be handling the majors quickly at that time. Then we will review what happened. So before going to this particular session, let me just review what happened to the trades, what we have decided, and what was the end of it. So I kept a sell limit order at 1.3832, so 3830, because the initial low was 1.3832 in the case of Euro, and that was not breached after the start of the European session. That particular low was breached, the initial low was breached, which was set around 3:30 GMT, and subsequently Euro started making that drop. Then I was telling that there is a possibility to do the technical trade by keeping a sell near that particular low, just below that, 2 pips below 1.3832, and it was not getting filled. So during a small gain, I modified the order and took 14 pips below 1.3816 SL with 30 pips hedging order or entry stop. Then, by 12:15 they made a quick drop, and the low they set below that of the low, I was watching it carefully. 1.3778 was the initial low. They breached it and formed 1.3755. You can see it in the live market code page. And then immediately when they stopped cutting it for 10 minutes, I just closed it with 59 pips profit. So we observe the formation of the low or the high of 10 to 30 minutes. Once you become an expert or once you are able to visualize their moves, then within 10 minutes you should be able to take the decision. Then in the case of GBP, so there is no hedging involved in this particular trade. So I made a very simple trade. As far as GBP is concerned, I also explained a technical trade below that of the earlier or the initial low, 1.5783. I kept SL order 1.5782, but it went up, and 1.5815 was the initial high, and my stop was 30 pips above. Then it went above that, so filled the entry stop, so I got hedged. Then afterwards it went up to 1.5823 and 28. Then immediately I kept stop at entry. I did not book profit here because they have been handling Euro GBP at that time. And once the stop was filled at entry, then I kept another hedging order at 1.5842. And then the market came down around 12:15, 12:20 GMT. And I closed it around 57.67 using a trailing stop and made about 15 pips profit. Because once they just made a quick drop and not cutting that particular intermediary level for more than 10 minutes, you can just close it. Then in the case of CHF, I kept a buy order during that discussion, and The market was around 87.49 or 45, and I kept a buy order 87.30. As I explained, 87.27 was the initial high, and they went up to the level of 87.65 and then 87.55 at that time, and came down, and 87.30 I kept the order. They filled it during the course of our webinar and kept 30 pips below a entry stop order, and that was not filled, and they went up, and before 12:30 GMT I closed it because the data release time and other things are there, and the going is good. We should be able to close it and look for another trade for the next session. Otherwise, we can keep stop at entry in the positions and try to maximize the profit if you want to do that intraday trade till end of your session. So I wanted to just prove that within the session we should be able to close the positions. It's not necessary that we have to hold the position for a prolonged period. And similarly, in the case of Australian dollar, 1.0358, I kept below that of the initial high, 1.0359, and they went up to 1.0363. That was the initial, that was the European session high. Then subsequently, they made an upward stop into 1.0375. You can see it in the line of the code page. And above this 30 pips above 1.0388, the hedging order was there. That was not filled. Then they started making the slide. Then I closed it with a profit around 1.0339 with 19 pips profit. And I kept Euro GBP a sell order at the middle level, and that was not filled, and they started making the slide straight away. During the drop, I do not want to enter, as I explained that in a dropping market, we should not chase and sell. In a rising market, we should not chase and buy. That may end up in showing that we are the highest level buyer or the lowest level seller, because they are all emotional decisions. So this is how the profit can be booked, or we can stop it out at entry. There is no harm, and still we see that we don't incur loss. So that is the important aspect pertaining to that of the trading. So as far as possible, first of all, we see that we don't incur loss. Then try to maximize the profit. And you know the quick moves or false moves in the market. Whenever they quickly drop, you buy. Whenever they quickly rise, you sell. When the high or the low or the intermediary level is not being breached for 10 minutes, then you will be able to earn very nicely from that of the market. Now coming to this particular session, so we have just observed the trade what I have taken in the earlier session. So let me go back to that of the live market code page. Now, as I explained, 1.3832 was the initial low in the case of GBP, which was formed during the Japanese session, 3:30 GMT. Afterwards, if you look into the chart also, if you want to refer to it, you can see that it has not gone above and holding here 87.89, 37.89, 37.82. And I want to recollect, and it is showing about 95 pips negative net change. When the net change is more than 75 pips, so you can understand very unlikely they will just gain the level in the market. When the net change is less than 75 pips, there is a great potential for the market to So this net change indicate from that of yesterday's US session close, and you find that from there it has dropped already about 88 pips. So less than 75 pips net change can bring in reverse in the market, but more than 75 pips they are unlikely to reverse the market intraday. And if you refer to that at the level, I have been talking about these levels, especially advising people not to give focus to that of the level, but you focus on the type of moves. Now, yesterday same time, we saw euro at 1.378385 up to 1.9 3793, etc. At that time, we are really thinking that it will make a drop from there because it has gone to that of the high. But afterwards, they made a quick rise to 1.39 and dropped it. Now we feel like buying. So this is how our sentiment changes when they show the levels. But it is a matter of only about 100 to 200 pips. But our mind changes when you look into that of the levels, and when we start giving importance to that of the levels, immediately our mind enters into that of the sentiment. So it has dropped almost 90 pips. Why not I buy? There comes the biggest problem. We will see how exactly they are going to make the moves during this particular year. So now it is a gap time. They are simply holding it. They are not making upward or downward move. And in the case of GBP, they are just hovering around 1.579096, and they are not breached the low, but at the same time the high they have breached it and come down, indicating that they have just made the upward stop and then made the slide. So they intend to make for the slide after the gap time. Then in the case of yen, it is still hovering around in this particular level, so there is no point in taking a position here. They are simply consolidating it. In the case of CHF, they are not breached the high or the low. The high they have breached it by about 10 pips. 87.55 was the initial high. They have made it as 87.65. They are all nominal moves here. You find that Euro and GBP are showing the USD gaining move, but Euro is showing about 89 pips negative net change, and GBP is showing only about 7 pips negative net change. CHF is showing about 54 pips negative net change now. So when Euro is showing 87, CHF is showing 53. They are simply consolidating here in order to handle Euro CHF cross. Then with regard to the commodity pairs, during that of the European session, we have seen that both Canadian dollar and Australian dollar were showing the positive net change, and it's a typical contrarian move. When they make such contrarian move, we know very well, when they make such contrarian move, we know very well they are handling the crosses. Again, you find Australian dollar is showing USD weakening move and Canadian dollar is showing USD gaining move. Hence, we call it as a contrarian move. So, not much of a change has happened in the market, but still they are holding below that of the initial low in the case of Euro, and just slightly above that of the initial low in the case of GBP, mainly to handle Euro GBP cross, making for the downward move. So earlier we have seen 87.37 was the low. They made about 20 pips drop. So not much of a move is happening here in the case of Euro GBP. So let me also show you the initial lows and the highs for the benefit of those who have joined during that of the US session. So these are all the initial lows and the highs normally, which is they are taken around 3:30 GMT during that of the Japanese session on a daily basis. I give it during the Asian session live market analysis webinar, and also give the forecast from there using the forecast model as well as the market reading. And now you find that 1.3837 was the initial low, and still Euro has not gone above. 1.3892 is the high, which is intact. Yesterday, after creating so much of bullish field, they retraced to all the levels, and now you can understand how they can create the sentiment and act against that of the traders. 1.5783 is the initial low. In the case of GBP, they are simply holding it so near that of the high, and they breached the high twice. They formed during the European session 1.5815 as the high, and subsequently 1.5828 as the high. So just a nominal 20 pips upward stop, and they have done it, and they do not want to really gain the level, and they wanted to consolidate here, make a little more drop, and induce the long holders to liquidate the positions before making the rise. And I have been telling in the month of September there will be USD gaining move, and that has been happening even last month. during the Tracking the Forex Market webinar time, I explained it. Probably you can understand how this sort of calls can be derived using the forecast model what I had developed. Then USD CHF. They just formed 87.24 and I kept a buy order at 87.30 and it got filled and they went up. And now currently it is still trading in the range 87.46, 87.40 currently, and it is likely to go up again because they are holding above that of the initial high throughout. Similar to that of Euro, they are holding it below that of the initial low. More buying pressure will come here, more selling pressure will come here, because those who are holding unfavorable position, their patience will be tested automatically. They will come for weakened closure of the position, liquidation. In the case of Australian dollar and Canadian dollar, In the case of Australian dollar and Canadian dollar, 1.0296 was the low, 1.0354 was the high, and they formed 1.0375, just about 21 pips above that, and subsequently they just made the slide and hovering around that of 1.0364 here. They are just consolidating Australian dollar and also the respective crosses, because whenever they show the contrarian move, that means they are handling the commodity crosses. Afterwards, they are expected to make the slide. And also in the case of Canadian dollar, the spread is very narrow, and 98.33 is the low. They breached by 2 pips during the European session, and subsequently 98.54 was the high, and they breached it by about 5 pips. 98.59 has become the high. So very subdued moves are seen in the case of Canadian dollar. When the spread between the low and the high is not of a very significant nature, between 40 and 50 pips, if it is less than 40 pips, then avoid entry into those currencies. That's what I wish to say. Now, I want to give an important aspect pertaining to that of trading. Trading requires enormous memory. And many people think that trading does not require memory, and that is why they depend upon their chart. I'm not trying to criticize those who are following chart, but you have to inculcate the practice of using the memory effectively. And you know that even when you use any of the gadget or a device like a cell phone, we wanted to upgrade it from 16 GB to 32 GB and 64 GB and things like that in order to store more information. But we never think about increasing our memory. So we, instead of improving our memory, we try to improve the memory in the gadgets, and we reduce the usage of our memory centers. In that scenario, what happens? You expect the instruments to do all the calculations for us. So the instrument has got its own limitations. And later on, you find that the calculation has gone wrong. And you still think that the instrument has to be improvised rather than increasing our memory. So in trading, the memory is very important, especially when you just do the trading. You take the initial lows and the initial highs and also make a note of the timings of the market and exactly watch during those times. You'll be able to see the market triggers happening. Then you will be able to understand that if you keep our memory sharp, remembering all the type of moves they are doing it, remembering all the concepts, you will find that with the help of simple live market code page, you can read what the players intend to do from time to time. Still, people find it difficult to inculcate that, and they want the chart and things like that. Earlier session also somebody asked for the chart. But why I am not forcibly giving here the chart? For the simple reason that it is an elementary aspect pertaining to learning process. So pictorial devices are required for a child to understand how the elephant will look like, how the tiger will look like, or a lion will look like. But later on, the child has to recognize the alphabets and should be able to use the alphabets to describe a lion, rather than sticking a picture. Suppose somebody asks, can you describe ask the child to describe the lion. If the child, or after growing up, simply show a lion picture, nobody will appreciate it. Probably the child has to describe it. So we have to, for that it requires more memory, and it is actually learning it. And it is able to construct the sentence, and it is able to describe and write a paragraph about it and things like that. So we want to be in the elementary school or in the kindergarten by looking into the other pictures. So if you improve our memory, then we will find those gadgets are not really required for us, and we will be able to take very quick decisions. So these are all the levels, these are all the timings of the market. 0030 to 7 GMT is the Japanese session, 3:30 GMT. During that time, the initial lows and the highs are to be noted down because the players set those things at that time. So whatever the gadgets they use, whatever the simple mechanism they use, if you use the same mechanism, we will be able to track them. Then the gap time between 7 to 7:30 before the start of the European session. 7:30 to 13 GMT is the European session. Now we are in 13 to 13:30 GMT is the gap time. We are watching the gap time moves in the market. They are making a little bit of firming up in the case of Euro and GBP. So gap time moves are false move. You can give the calls on the trading. So when they firm up during that of the gap time, what we will do? We will take sell positions. When they dip during that of the gap time, we will take buy positions. So I'm not going to give the trade calls now. So instead, I want you to just estimate by yourself and probably make a note in a paper. Just in first 10 minutes of the gap time, you try to take a position. If they firm up, just sell. If they dip, take a buy. And by 14 GMT, see the fate of the trade. Then you will be able to understand then how in a very decisive way they are making the moves in the market. So it is not the trigger and things like that. Still they make very quick moves during the session start. And you might be wondering, 13:30 you are telling us the US session start, and especially 12:30 onwards you come across the data release, etc. But banks officially open the trading by 13:30 GMT, and the players synchronize their tradings during that time. During the gap time, they use a specific type of order to do the stop-ins. And that is why you come across false move during that of the gap time. Then there is a gap time after the US session, 20:30 to 0030 GMT, and there again you come across the false move. So I explained how exactly the factors to be considered for trading. So probably I'll rush up. We follow the market as it is 24 hours market. We follow it using the GMT time frame. And the sessions I have given you, the 3 sessions, Japanese, European and US, each session can be subdivided into first 1.5 hours as the early session, the last 1.5 hours as the late session, and in between is the mid session. During the mid session, they handle the crosses. During the start and the late, during the early and the late session, they handle the majors. During the gap time, they handle all the pairs, but they make false moves. Then live market code page link I have given you. Then you can see how exactly the market is making a false move now. So Euro 1.3804 will take a sell and see what happens. And in the case of GBP 1.5811 will take a sell and see what happens. So these are all the 2 trades we will just do and see the end of it during first 30 minutes of the session. In a pair where the spread is less than 40 pips, avoid taking position because they are consolidating with a purpose. So there is no point in doing an intraday trade there. And then entry, always think of enter near that of the high, a sell position, near that of the low, a buy position, when the high or the low are not breached for more than 30 minutes. So when the high or low are breached, this is what the example we come across today, and they breached the initial low in the case of euro, and then subsequently holding below that throughout European session and also start of US session. So what they intend to do during US session or during the gap time, what they intend to do during the US session, we can read it from that of the analysis. Gap time moves or false move. So they gain the levels during gap time. They intend to drop in the first 30 minutes of European US session. So let us see whether it works or not. Then you can use it in your trading decisions. So if you make a note of the timings, then you will be able to really take trading decisions effectively. If you don't make use of it, and whatever conventionally given as Asian session and the European session, UK session, New York session and things like that, they are mainly to just give you that reactions part of it. I do not want to comment more on that. Then similarly, exit when you are taking a sell position at a high, you try to keep the target. The exit target will be near that of the low. And use the trailing stop in order to maximize the profit in your position. And when a position makes profit, use the trailing stop. When the position is making loss, try to keep hedging order. So that way, you will not be losing money. You will only block the money, and once it is hedged, you can do either way trades and come out with a profit, because the market can only make an upward move or a downward move in a given time. So always understand the risk has to be limited by keeping stop at entry once the position makes profit. Then you can maximize the profit. Normally what happens here, conventional or a beginner, when the loss is increasing, they simply watch the market and ask so many experts whether euro will go up or euro will come down and things like that. Then when the profit is seen, they quickly grab it as 10-15 pips and later on repent that, oh, I could have kept the buy order if euro has gone up really up. But next time, they similarly do a wrong trade and hold a loss-making position. And when the position makes profit, out of greed, they think that, okay, euro probably could go to 1.41, so probably I'll hold it for a long time without any trading strategy. They go up and come down like what you have seen yesterday and today, and it will continue to make loss. Then repent, I could have just closed the position with a profit. So continue to repent on the mistakes. That means there is no improvement in trading decisions. So this is the condition you come across today. The high or the low are breached. In the case of Canadian Swiss franc, they breached the high, the initial high 0.8724, and they are still holding above that. They are coming closer to that of 87.30. We can take a buy there. And then they are expected to go up. And similarly, when the low has been breached, in the case of euro, 1.3832, they are still not gone above that. So there is a likely chance that they wanted to make a drop. Then stop and what you have seen in the case of GBP during that of the European session, they made a gain above that of 1.5815 and formed 1.5823. Then subsequently came down and went up and formed 1.5828 as the high and dropped. So they are stop ends. False move, they go up to that of the high and come down without breaching the high, or go up to that of the low and without breaching the low, come up. So yesterday you would have noticed that during that of the European Japanese session, they opened high and then came down to that of 1.3704 in the case of euro, but they are not breached the low. After coming there for 10 to 30 minutes, then started gaining all the way up, then made the upward quick move. The quick moves are false moves in the market. There was an extended upward move yesterday and the trigger may be something. On a daily basis, the trigger will differ, but the type of moves will remain the same. So they made the extended move, and afterwards, followed by today they are doing the intentional move. So the intention is to drop euro and GBP in this month. I don't know the reason for it, but I can only give the forecast on that. So So they quickly gain the levels without buying much and exit out of their long positions and build the sell positions yesterday. And today they started dropping. And they are not giving profit booking opportunity to that of the higher level long holders. So in a hurry, if you jump and buy during such a rise, and if you don't quickly exit out of that, what happens? Start making big loss. Then when they make the intentional move, the very next day, they start slowly sliding it, and our fear will intensify as they drop more, and finally you find that you liquidate the long position in this. If you use this application next week, so if you simply put the buy as a sell hedged, you will be able to see buy is making profit, sell is also making during the either way moves. Euro and GBP are just in the wide range swing, and only those currencies which have undergone the multi-year trend reversal, multi-year moves like the denominator currencies, USDN, USD CHF, and also the Australian dollar. They are all in the process of reversal. That is why they are just reversing those three currencies. In 2008, you know that they had taken Euro, JBB and Canadian dollar, and they made the multi-year moves. Euro went up to 1.60 and GBP went up to 2.11. Afterwards, it came down. At that time, Swiss franc and Australian dollar, they are not becoming very, very strong. They only made nominal moves. This time, they are doing it. And that in the case of the denominator currencies and one of the commodity pair, namely Australian dollar. So how wisely and systematically they are selecting the currencies and doing it, you might be relating to their economic conditions. So whenever they make an extended move, wait for 2 hours. So yesterday they gained the levels to 1.3936 and stop cutting the high after 2 hours. Then if you take a counter trade, sell, you'll be able to see profit only today. Not yesterday, today, but when they make an intentional move. So when you track the moves effectively, you will be able to easily make money from that other market. That is what my humble suggestion will be. Now, what is the expected move in this particular session? Euro and GBP are expected to slowly swing and slide and drop towards close or weakened. Let us see how exactly it happens. So as I explained during the gap time, I gave a call. I know very well by the time I finish my talk, the gap time will get over. So theoretically, we have a sell position 1.3811 with an entry stop of 30 pips, and GBP 11 with an entry stop of 30 pips, and CHF I think it's 40 did not come there. Okay. So these are all the trades. So when I give three trades, doesn't mean that simultaneously you can trade in all currencies. You have to take one position in a currency. When the going is good, either in making USD gaining move or the USD weakening move, you are able to keep stop at entry. You are eliminating the risk. Then go in for another currency. When they make a small pullback, you try to enter again, sell position in the same direction. So that way, if you try to do it, even though you might be trading in more currencies, but you will not be taking risk in all currencies. This is fine tuning of the trading. So this, if you try to do it, you will be able to really see the risk is minimized and the reward is really maximized. So now the session has started. 13:30, we can see a small pullback happening. So we have the hedging order to limit the risk, and let us see how exactly they make the moves. And if they give us a loss, we don't mind accepting it because we are only limiting to 30 pips, and still we use the hedging order to limit the risk, and we try to close it effectively without making any loss by keeping stop at entry in the hedge. As I explained, GBP, they are trying to make a narrow range swing. Still, I wanted to explain to you that gap time trade, how exactly we can do it. So let me minimize the PowerPoint presentation and take up the questions which are asked here. I'll focus the camera over that of the live market code page. Then Francisco, could Euro and AUD drop more during a session? Yeah, they are expected to slowly slide. Probably data release and everything could be used as a trigger. And 14 GMT, there is a data release. I think they are holding it. They are expected to slowly slide. Okay. Then MRC. How this data is calculated? Low, highs, daily on. So the initial lows and the highs which are set by the interbank treasury, and they set the initial highs and the initial lows, and later on the players make the upward move and the downward move, widen the gap between the low and the high, and set it by 3:30 GMT. Then afterwards use them as the reference levels for them to make the moves. Is there any rule that once they form the initial low, they should not go above that? It is a simple trap technique. So they formed 1.3832 as the initial low and still continue to hold it below that. It is nothing but the trapping technique. Similarly, in the case of CHF, they are holding above that of 0.8724. So they are not allowing it to drop. But if you look into that of the technicals, it might look different. So that is what, when the players ask all the technical analysts to do the analysis and give it to them and see how the traders are taking positions and act against the traders. So if you follow simply the technical analysis, then there are chances that we could be stopped out. We have to use the stop effectively. And so when you are frequently stopped out, the traders develop the tendency not to keep stop. See, instead of understanding what is happening in the market, we try to avoid being hurt. In that process, we lose the account as a margin call, etc. And similarly, another important aspect, the traders lose money simply because of over trading without understanding what the leverage is, how much of money will be taken out when the market moves against us. If you learn it very well, then your trading will really improve on it. So it is not only the forecast alone is going to help you to make money from the other market. Your trade plan and also your money management, these things you have to really focus on. So interbank treasury set the initial lows and the highs, and the net change is calculated based on the last 30 minutes of the US session. So between 20 and 20:30 GMT, whatever that market moves, and they try to take the average, and that is being considered as the closing level. And from that of the closing level, the next day move is being calculated. And if market goes up, it shows positive net change. When the market comes down, it shows negative net change. So it is simple as such. Then GB. When is the change in the timing due to daylight? Yeah, once the daylight saving system is incorporated, then the market timing changes. I will give it in the next webinar, the change timings. I have given it in my trading system, all the timings which are to be followed during that of the normal and the daylight saving system. Probably if you go into that of the earlier webinars which are being listed in FX Street Archives, you will be able to get it beforehand now. Otherwise, during the next webinar, I'll explain it. And what I suggest is, if you are really interested in making good money from the other market, then try to learn the success stories of various analysts and try to see whichever is applicable for you or whichever is easy for you to understand or which can be incorporated in your trading system. And then execute such trades in demo trading account and try to see what is the success rate. I can simply claim that my success rate is 90% or 95% or 80%, things like that. But you have to test it, because your equity, you only know, others don't know about it. I can keep about a big usable margin like 1 million and try to trade and say that I earned successfully using it. But when you start with $2,000 or $500, the same trading strategy may not be applicable. So that we need to understand. Then if USD GBP will go down, then how high before this move GBP could go? So as far as GBP is concerned, it is an influence of the move in the case of GBP as well as USD. So USD is in positive net change and USD is in positive net change and GBP is in nominal positive net change, both of them. Because of that, you come across GBP, yen is showing 15 pips positive net change. So afterwards, when they make a drop, when they are making contrarian move like this, when they start making the slide, they could slide even Japanese yen. As I explained, that slowly they are just making small swing here, and finally they intend to make, during that close of European session, they showed a negative net change. Again, they are holding it, and they could show a negative net change slowly and induce the long holders to lose patience and liquidate their positions for the weekend. So that is how they are trying to induce the traders to liquidate, and they are the buyers. They will not live like that, and they will make one quick extended downward stop and before making a big reversal move. What they had done it in the case of CHF, if you remember, they dropped it from 0.86 to 0.71, and from there they recovered it. And in the case of Euro CHF, they dropped it from 1.22 or 24, they dropped it to 1.0077 and reversed it. So they are very aggressive that way. They don't allow anybody to make money unless and otherwise you use hedging. Then A, USD GBP will go down. Okay, GBP USD have to firm up now. So GBP USD, they are not going above to that of the initial high 1.515, and up to 14 GMT, if they don't go above that of 1.515 or 1.528, that means they intend to slide later on. They go above and stay above there for more than 30 minutes, then our position will simply hedge it. We will allow them to go up and book profit there. Afterwards, when they drop, we will book profit another side. Or if they aggressively gain, then just close our buy position, sell position, and quickly earn maximum money on the buy rate. So that is the advantage of using hedging. So that sort of quick decisions you can do only by looking to that of the live market quote page. Yesterday they made a very quick rise from that of 1.38, 1.39 in the case of GBP. Euro, you could have noticed in the net change that they just made only about 80 pips quick gain, and then afterwards they made second gain, third gain, stop cutting the high. Then they made about 150 pips gain and start making the slide, hovering around there and start making the slide. So it's nothing extraordinary. Whenever there is a trigger used, they make such moves. So they are all called spikes. So that they do it when the market looks subdued. Suddenly when they do it, you become spellbound. So they know how to trigger your emotions. So today they hover around the same level like yesterday. And only emotional traders, if they have taken a sell around 1.38, would have covered with the loss at 1.39, thinking that it will go to 1.40, and euro is not going to drop at all. That's how that impression would have been created, and subsequently taken a long position. And when they drop, accept a loss. On either side, accept a loss. This is what happens for most of the traders because they take emotional decisions. Then what will happen to GBP, USD and Australian dollar? They are expected to slide. So Can you please tell, will GBP and Australian dollar will go up? So one is asking whether it will come down, another is asking whether it will go up. Same. Okay. They are expected to slide, sir. It may appear that they are going upward because of 14 GMT data, then afterwards they are expected to slide. What could be the moves on Monday? Okay. From next week, during next week, they are expected to make either way volatile moves. A quick drop and a quick rise, that sort of moves are expected to happen during the consolidation frame. I will explain more during Asian session live market analysis. How the bid and the ask help us. See, the bid and the ask you come across. See, sometimes they show a higher bid and a higher ask and things like that. They are all the signals they provide, and they have a systematic procedure for showing it, because in the interbank treasury, all the communication devices are being recorded in order to avoid any trade disputes. So it is not easy for the players to just instruct, come on, buy euro and take it up or drop it and things like that. Then they will be identified. So to avoid it, they have a signaling system and they follow it. Just like code words. In army, they use it during different action. Then AAA. If Euro USD and GBP USD will drop, what will be the Euro GBP? Euro GBP already they cut the low. So 87.17 and then come above that, closer to the top, 87.37. That is the initial low. So not much of a move is expected here at the moment, because they are making only 20 pips swing. Either way, they could induce the traders to do the short covering and the long liquidation. Sometimes during weekend, they simply hold the market without making much slide, and those having higher level long to liquidate, those having lower level short to cover, and they make happily money by simply holding the market without even making moves. Then Gulab. A technical saying that GBP and AUD will go up more. Okay, we will just review it. Whichever way it moves, we'll accept it. So let us not go in for a debate. This is the method I found out. I am just explaining this method. If it is suitable, probably you can make use of it. Then Custas. How profitable your system is. See, I can say it is more reliable. I do not want to give it in terms of percentage, because you focus on the percentage and you do not follow on the process of making it. Say, I can give the forecast, I can give the trading strategy. How effectively we implement it is the question. If you don't implement, you simply follow the forecast. That's what I find in the blog. So simply follow the forecast. If the forecast is good, go on appreciate. And if the forecast goes against, immediately shout and yell and make all sorts of noise. That shows that there is no discipline or incorporating all the components what I have given it in the trading. So we need the forecast, we need the market reading by ourselves, and also using the technical strategies which are very essential. We cannot allow a loss-making position to continue to make loss. And these things are very important component in trading. If we don't use all of them successfully, and you only ask for the end result, the result cannot be achieved. And probably we can set the end goal, and we have to do enormous research pertaining to the process. But many people set the goal and give less importance to that of the process. Then they find it is next to impossible to achieve such goals. And you keep a goal that I want to really make money from that other market. Okay, that is goal. And how exactly you can do that? Understand the entire process. So let me just show the slide. What are the trades we have thought of? Then 1.3811 with 30 pips hedging order, and 1.58 1 with 30 pips hedging order and 87.40 with hedging order 30 pips below. Let us see the fate of it during the day, and probably you can understand whether this particular method is helpful or not. So I take this opportunity to thank FX Street and also you people who have come here to listen to my webinar. On a monthly basis, I'll be giving this twin webinar, Tracking the Forex Market Together, and you can just attend to this and also listen to that of the archived webinars. If you got any questions, you can ask me so that I'm willing to explain the trading strategies in detail. Thank you one and all. See you on Monday. I'll present the Asian Session Live Market Analysis webinar. Thank you one and all.